Welcome to the Hedgeneer podcast with your host, Michael Watson.
Hedgeneer.
Hey everyone, and welcome back to the Hedgeneer podcast. I'm your host, Michael Watson, where we discuss technology, data, and AI within the asset management, hedge fund, and proprietary trading world. Today we have a special guest, once again, Niall Hurley, the CEO of Eagle Alpha, where they are one of the primary providers of alternative data and insights to asset managers as well as corporates within the industry. Niall, welcome to the show.
Thanks very much for having me, Michael. Hope you're having a nice summer.
Summer is excellent. Thanks for asking. So I first came about Eagle Alpha, and then as a function of that, met Niall when I was running data engineering at Citadel. And at this point, pretty much everyone on the buy side is not only familiar with Niall, but have used Eagle Alpha extensively or are interested in figuring out how they can better add in alternative data into the space. And a lot of that's because they've been around for 12 years. They're a primary name within the alternative data landscape. Niall, super excited to have you here. Kind of walk me through a little bit of what's been going on over the last 12 years in the alternative data space.
Yeah, there's been a lot of change. It's probably around 2016 that Midtown New York and London and Boston and Chicago woke up to the fact that there's all these new data sources. That was a real inflection point. And it's led to a big increase in both, not just demand for data, but availability. And, we're at a point today now where we're at 2,000 data products, almost 2,000 profiled on the platform, and also connectivity and delivery of data from the platform as well. So it's a lot has happened in the last 7 years.
Totally. And so where do you see a lot of that change happening? Because I originally got exposed to some of the all data stuff when the credit card products were starting to get really hot, but not everyone knew all the names. But suddenly fundamental analysts or quants were able to tag these transactions and forecast out retail sales, anything associated with a consumer transaction, or sometimes even a B2B transaction if it was on a card. And forecast out like top line revenue growth or growth in specific product lines better than anyone had ever done before. And that's like going back, as you were saying, like 12 to 2016. And then there was this domino effect of like footfall data, geolocation data, web scraping data, and it just proliferates and starts with consumer, and then it starts going over to TMT, healthcare, getting into industrials and financials, and no longer just relevant for equities, but then corporates, and then not just public equities, but then privates are getting involved. And then a lot of this data is suddenly relevant for macro rates, and the use cases just kept snowballing. And like, as you're saying, like your platforms also just continued to snowball as well with not just like 20, you're saying like 2,000 different data sets, but you're referring to them as data products. There's something that is like out of the box ready to deliver insight on. Like, kind of walk me through like what that evolution has looked like, specifically around how you think about like a data product and not just, we have data in an S3 bucket, come and get it.
Yeah, so I think in terms of some of the trends you've described there, you've ended up with a marketplace that has a very, very expanded offering if you need insights in what the US consumer is doing and North American consumer. So a lot of data as it relates to B2C type spending, where people are going, where they're traveling, what they're reading, all a lot of insights into workforce and so forth. But when you get outside of North America, when you try and get insights into B2B, into supply chain, healthcare, semiconductors, pan-Asian, pan-European, global data sets, we still have a long, long way to go. And you're absolutely right. Like, a number of years ago, it was all about the profile and gathering the due diligence documentation of a data set. But then what we've seen now is those data products are moving down that productization curve. So now it's the leading data categories, the leading category providers, and they don't just have a data set. People are now moving into KPI modeling. A lot of the advanced vendors have dashboards. They have insights teams. So there's a lot more happening around these data businesses than just providing, as you say, access to data in an S3 bucket.
Totally. And I think the point where you're going to the next step of what are you actually using this data to be able to forecast and mapping that to the KPIs and unlocking that in a product is doing a lot of the work that some of the larger buy-side firms have done because nobody else was trying to solve that problem for such a long time. Where, yes, you are trying to forecast down, let's say, Macy's top-line revenue growth, but like, are you forecasting out in-store? Are you forecasting out brick and mortar? Are you forecasting out a new product line that they're specifically trying to be able to better understand and mapping that to, well, what is that relative to the street? And having that in a single pane of glass that just works, because what is the who's going about and modeling out street estimates? Well, Bloomberg did a good job for a while, but now Visible Alpha is kind of like just taken over that space. So doing that record linkage between a data product and a KPI estimate that at least represents consensus right now is a lot of the work that if you have to go and build your own team, you have to do on your own if you're a manager. But as a lot of these products are getting more and more sophisticated, just having that KPI mapping done out of the box is something that right now is table stakes. That's not something that like, oh, we do that and it's special, that's our alpha. Like if you're not doing that, you're actually already behind. We also spend a lot of time on that at the Hedgeneer platform where we think about the ontology of all the data behind a hedge fund and then integrate it with like world-class data providers like Eagle Alpha. But I'm curious, you're also touching on something else where this is to some extent a solved problem within the US market. But once you go into EU, you go into APAC, you go to the rest of the world, it's kind of a blind side. There's not as nearly as much insight there. How do you go about thinking about solving this problem, not for North America, but for the rest of the world that right now is still hasn't really solidified like the North America alt data market has?
Yeah, like you mentioned earlier about, a category that was probably the most impactful back, pre-2017, like credit card, debit card data. Like if you try and get pan-European credit card data, debit card data today, it's not straightforward. And there's specialist data companies in that area that are putting together panels, country by country. And so we are making progress. And when you go to Asia, it's still very country-led. There isn't anybody really doing anything meaningful in terms of trying to create a pan-Asian product. But other types of data, you really need to think about the data collection methodology. Like a lot of the data products we work with today, they've been collected through panels like credit card, debit card. They've been panels of cell phone panels, IoT. They're scraped through regulatory or filings, so web scrape that is. So a lot of the data collection methodologies are very advanced, but the type of data we need is often sitting within corporate environments. And so, some of the most interesting data is still to come. It's sitting within the CRM and ERP systems of corporates. And if there's been one important trend over the last year, it has been that corporates are realizing that data has a lot more value. I mean, you and I, have known this for many years. This is what, we've been working on. We realize that the value of data. But now it's an agenda item in the boardrooms and management teams across North America that, our data has value. And, the headlines that people see around Reddit and, ChatGPT and AI and, the requirements for data for large language models, all these things are moving data from the liability side of a corporate balance sheet to the asset side. And that's a positive. And because that allows data to come from internal environments, to Wall Street with the appropriate guardrails in place in terms of compliance and commercial sensitivities.
Got it. So I'd love to double click on that. So what does that look like for a corporate going about the process of monetizing their data and creating a more holistic set of visibilities for investors to be able to understand? Like, I'm assuming you're doing a lot of that heavy lifting of being that middleman in integrating the data that might be in an ERP system or might just within a CRM and making that into a data product. But that's a lot of work, right? Like that can't be easy. Can you like kind of color me in on what that process and what that looks like?
It's an interesting journey, because corporates are not set up as data set sales businesses necessarily. So we're used to a world and an ecosystem, on the platform, and a lot of people became familiar with alt data through conferences. They're specialist data as a service companies. They're in the business of data set sales. To your earlier point, they've created a data set. They've created products from that. When data is moving from a corporate environment to Wall Street, they don't have that motion in place. They haven't been set up, nor is their operating business focused on selling data. Their businesses almost always has another focus. So the first thing that they're trying to even understand before we do any data operations or any data engineering is my data actually worthwhile bringing to Wall Street at all? What's the potential value? Is it differentiated? How should I think about use cases? How should I think about compliance? And that's very easy for us to solve, because we're able to take any corporate data asset and benchmark it to all the various metadata that we have on the platform across 2,000 data sets. And that's a very unique asset to have that amount of metadata, to allow that exercise to happen. And then once you've established that feasibility, like that there's a there, so to speak, then that can bring in place, okay, now we need to go deeper on legals, on consents, data engineering exercises to get data into state of readiness. All these things will flow from that. But the first thing people need to understand is there an actual payback on this exercise, and are we comfortable doing this? And that's where we add a lot of value in that initial phase, as well as supporting ongoing distribution and delivery.
Yeah, so I think that's such a good point, because I've oftentimes heard some data product or some vendor, somebody selling me something that assumes that they have gold, and they will sell it to you like it's the best thing since sliced bread, but it maybe only covers 2 or 3 names, both small cap, zero liquidity, and it's like delayed by 2 or 3 weeks. And it only helps you get like a very small, unrepresentative sample size of that company's business or customer base. So then you actually are trying to use it for any real type of predictability. It is a crapshoot. And then on top of that, they only have 1.5 years worth of data. And so there's zero ability to backtest it. And this organization that's trying to sell you it just doesn't realize any of the actual prereqs in order to have a truly valuable data product that you could sell to an investor that still gives them confidence that they're going to get an ROI on it. Because like if they're just breaking even on how much they're spending versus how much they're monetizing, you're completely ignoring the opportunity cost. And identifying that as quickly as possible is something that a lot of funds, actually there's probably some alpha in that, and the operational alpha of identifying not just what's really good, but really quickly identifying where the juice is not going to be worth the squeeze. And so it sounded to me like you're in an interesting place where you're trying to do that identification as quickly as possible so that you get as many reps and iterations of finding that next piece of information that you want to invest a month of engineering time to really get right so that you can go to market and sell it to 20, 30, 50 different customers. I'm curious, like, how do you go about like not identifying what's good, but really quickly identifying what is not?
Yeah. So actually most of the time where you're adding the most value is telling them not to bother. That there's already existing data sets or data products, to your point, that are in the market. They're 5 years of history, they're point in time, they're well productized, they're mapped to entities, they're at a price point, that is probably a fraction of the price expectations of the corporate. And so, they can waste a lot of time trying to come to Wall Street with a product where it has limited chance of succeeding. There's other instances where they've got really interesting data assets and they don't even realize it. So trying to help the marketplace function is really core to what we do. We work with all the top asset managers and have done for many years, we have a very deep understanding of what their needs are across quantitative, multi-strategy, multi-asset institutions, private markets, macro, credit. We've seen so many use cases in our history as a business. We've been around for 12 years now. There's so much IP within the business. Very quick at triaging these opportunities when they come in. And this is all about expectation management, so that, when they know that this is what the compliance journey is going to look like. This is what the back testing journey is going to look like. This is how the buyers, will, in an advanced fund, they're going to look at your data. And once you get them comfortable and you get the expectations set correctly, they're generally very positive experiences.
Totally. What are you, when you engage the supply side of this marketplace, and we go to the demand side in a second, on the supply side, what's the split between you reaching out to a corporate versus them reaching out to you directly?
Yeah, there's a lot of proprietary elements there of what we're doing. So I'll keep it reasonably high level. Because one thing is, a data as a service company or a specialist data set sales business selling in to an asset management firm, there's a very defined persona that's doing that selling, and there's a defined person that's doing that buying. When you're approaching the supply side of the market within the corporate world, there's a significant variety of people that actually act as the sponsor or the champion of such initiatives. So that's the first thing. And the second thing is they're typically not acting in isolation. They might be working with other people or other consultants in terms of how, when they choose to go on these monetization journeys. And then the other thing I would say is it's not often just about Wall Street. There's other ways that they could be bringing data externally. They could be doing it for the benefit of customers, for suppliers. And then there's also data aggregators out there. It's not always just about the data going direct from the corporate environment straight to the fund. So there's all these different variables. But there is both an increase in inbound, but also there's been an increase in socialization that we've done. So specialist events, it's different to what you would typically see in the large conferences formats. These are a lot of roundtables, going into focus groups, getting people comfortable with some of the main topics involved.
Totally. And I'm assuming that you guys have been around for 12 years. You know your clients really well. You engage them all the time. Everyone that I talk to about Eagle Alpha that's on the buy side, like everyone that I talk to about data science work on the buy side, they all know Eagle Alpha. They all have relationships with Neil, or they know somebody on their team. So like your ear is constantly like working with clients, understanding what they want. And so you're uniquely positioned to go out and find what is like the best way, the most compliant way to be able to like get them information that works effectively. And I'm assuming that it's kind of interesting when you're saying like, oh, like you go to these specialist conferences, or you engage the corporates, find the strategic person internally that wants to be the champion. And being kind of like that in between is such a cool space to be in. It's kind of got to give you a ton of insight into like the direction that we're currently going in. And I guess like that's what I kind of pose you next. Like you're like this really strategic person in between buy side firms, and as you point out, it's not just buy side firms. It's also if you're thinking about a major corporate expansion in brick and mortar locations in your Starbucks, you want to know like, well, where do I see the most footfall data? Where do I see the most like retail spend in certain areas that I don't currently have a location on? I mean, any retail brick and mortar needs this information to be able to optimize their physical footprint. And you're in the middle of all that. So I'm curious, like, where's it go next? Like, how does it, there's something new coming along that we just haven't thought about yet? Where do you see this continuing to expand to?
Yeah. So I think what you've described there, firstly, is, as I've sometimes said to some of our clients, it's not a good news day when a New York hedge fund reaches out to a corporate and they're not in the business of selling data. It's very different. If you're in the business of data set sales, that's a positive experience. So for a lot of corporates, they need a safe socialization of the concept. They need a safe staging area to work through some of these points. So yes, we do solve for all that. But beyond feasibility and identifying data sets that address the blind spots in the market, which is our focus. So B2B, supply chain, healthcare, semiconductors, all these areas are really important. Getting to interesting data assets in Europe, getting to interesting data assets in Asia. We'll continue to do that feasibility phase. We'll continue to do that discovery phase. We'll continue to do that profiling. That's core to the business. The other thing as well that it's important is what's distinct about Eagle Alpha is we've been delivering data for many years. So we've been delivering trial data into the top funds for almost 4 years now. So we have a history where we've helped data vendors with go-to-market strategies and also delivery of data. So it's very natural for us where a corporate says, I need more than just the initial buyer engagement. I need more support. We're able to do that. We have specialists in the business. We've done it as a business historically. We've also had people join the business. That's what they've done prior. So what that means now is the corporate can have that end-to-end journey as a data owner and have the benefit of that data being delivered into the buy side on an ongoing basis without it being in any way without it encroaching on any of their operations as a non-data set sales business.
Makes total sense. So that's all on the supply side. What about the demand side? In terms of your clients, so I guess your clients to everyone, you are the marketplace. The marketplace is a client to all. But on the demand side of that, what do you see change? You see like prices going up, prices going down, new people coming in, same old faces, retail getting more interested in the space. What are some of the trends you've seen from the buy side?
Yeah, so I think what you've seen generally over the last 7 or 8 years, you've seen a group of funds, primarily quantitative and multi-strategy and multi-asset groups with centralized data teams, and you're very familiar, Michael, with that dynamic, that have really advanced. And we run a risk of creating effectively a wealth divide in the market between the haves and the have-nots in terms of how advanced some of those larger groups have come in terms of the throughput of data, in terms of what they're back testing and subscribing to each year. But there is positives. We're seeing more manager launches now. We're seeing some of the talent from the top end of the market move through the market. And to your other point, if you went back a number of years, you really needed very advanced data engineering and data science to work on data ingestion, data prepping, data mapping, data set combinations, anything to arrive at feature extraction, KPI modeling, all the things that you know really well. The good thing now is a lot of the data offerings are becoming more productized and the solutions in the market to help people. So I do think we're seeing what some people have termed democratization. We should be seeing that it's easier for people to get the benefits of these alternative data sources. But still, the vast majority of funds are still very much focused on market data, exchange traded data, reference data, and they haven't ventured into some of these newer data sources. And that will change because there's already parts of the market where these data sources are the new consensus. If you're trading large cap US consumer or large cap US tech, you need to be using these data sources. It's not just about sell side research and consensus earnings and so forth. You've got to be using these data sources, and I think that's going to evolve into other industries and other geographies in due course.
Yeah, and I think that what you're saying is that a lot of this technology, these systems are table stakes. One of the things that I've noticed is that there's a general narrative that the MultiStrats, the multi-managers will take over the alternative asset space because they have a moat around their technology, data, and platform. And I actually personally think that's the biggest farce that people have bought into around the inevitability of MultiStrats taking over because their technology. Because from my perspective, I've ran enterprise data engineering at some of these large firms. I've been head of data engineering. I've head of like equities technology. I've seen the way that the entire ecosystem of a security master, a pricing master, entity master is tied back to an issuer. An analyst makes an estimate on that issuer tied to an event. That event has certain outcomes. Events can be trial data. They can be earnings data. They can be judicial rulings. They can be a Fed FOMC outcome. And then analysts have concepts of coverage around these events and these companies. And these companies have sub-entities, whether it is different product lines or segments or drugs or devices that then your data platform starts plugging into to be able to forecast around that. And what, from my perspective, the big funds do really well is they try to integrate all of that into one platform. Now, it's all very decentralized, but at least they're a good attempt at linking market data, reference data, employee coverage data, risk data, alternative data together. But even the people that do it the best, it's incredibly decentralized and inefficient, which is why I started Hedgeneer, right? Where we just have like one data platform that connects all of those different data sources that we deploy in our clients' clouds, and then make it trivial to integrate to a third-party alternative data provider like an Eagle Alpha, or like a Visible Alpha, or like a Bloomberg, or Infusion, or Arcesium, or MSCI Barra, or Axioma, or any of the other data providers out there. That there should be one platform that all this is integrated on, that then you start choosing what is the best-in-class data provider for each one of these verticals, ingest that into a platform that just works, and then the types of products and experiences and your ability to quickly evaluate data, identify if it's something of interest or go on to the next one suddenly becomes easy. So I actually think that in the next year or two, there's going to be, and I think Ken already quoted it maybe a year ago, that we've been peak multi-strat. I just don't think there's been, from my perspective, a good enough job of software providers providing holistic solutions for managers, at least from my perspective until now. And so I expect the ability for single managers, smaller funds that have great platforms like Hedgeneer to be able to cipher through every single product that an Eagle Alpha would be offering, and identify right away, is this something that has legs, or if not, and if it does, let's buy and really quickly build that into our research and portfolio construction process with good risk on top of it, and then start creating repeatable insights that run on rails. So I actually I'm very, I have a bit of a counter thesis that we're past peak multi-strat, and the theoretical moats that investors and others think that exist because of technology platforms within these multi-strats is a lot more shallow than people think it is.
I would agree. I mean, I think some of the most exciting things you're seeing at the moment is what's happening around, as you say, the productization of data, KPI modeling, all these advantages are significant. I do agree with you. People have been talking about like a Bloom alternative data for many years now, and it hasn't really come through. And attempts at marketplaces where you could have 2,000 products, all on common identifiers, the ability to browse, the ability to buy, even small samples. People would like to see more, what some people call tickerization. None of that has really probably progressed as much as people would have expected. But I do think we're going to get there. I think there's some very exciting things happening on our platform, and that's going to continue. And it's going to get easier for people to work with these data sources. And there's things happening now, where the skills gap that a lot of funds have experienced to work with all these new data sources is beginning to fall away. Either the products are better presented, or there's progress being made with certain technologies, whether that's an AI or LLM point, and that's making it easier to work with these new data sources as well.
Totally, and even the open source space. I don't know if you saw it, but 0xFDF, he's an anonymous quant on Twitter, and he's really active within the quant subreddit, released Tyrannico, which is an open source risk model library that did a really good job of like creating a basic infrastructure for producing market, industry, and style factors. There is basic functionality for the orthogonalization of the separate factors. Now, that doesn't, when we were looking at it the other day, it doesn't orthogonalize within the components of an individual factor, but it's not bad. And the ability to like have a couple people make some PRs against Tyrannico and then somebody plugging it into a relatively affordable data provider like a Polygon and some of these other data providers for the fundamental data. And then just run that on a daily basis, get your covariance matrix, get your orthogonalized loadings, get your factor returns, and start providing some of these tools, not like a relatively cheap price point where right now you have Bar Axioma spending $150 to $250,000 a year in order to get these risk models. Like we're only like 2 to 3 months off of just having a baseline risk model be something that's completely open sourced. And there's still going to be the need for adding your own custom risk factors on top of this risk model, but having a library that the industry is standing around or starting to coalesce around for a open source risk model generation library is super cool. And then there's there's also tons of interesting stuff also going on in risk model innovation. For example, there's the baseline guys got into YC and they're working on really fast recreation of risk model factors, which is really similar to what you're going to get out of some of the big shops. You have Rich over at Arcana working on his own risk model and some of their risk tools. We're building out like a risk decomposition time series infrastructure where we can take in any risk model, we deploy it in our client's cloud, allow them to be able to see their portfolio both real time and risk. A lot of stuff going on in the open source community. Like I think that one of the things that's really I'm seeing a lot of actual innovation right now within the quant subreddit of like risk and innovation. How people are talking about data from like a more communal way than I've ever seen before. Like a lot of these conversations used to be very siloed within small teams at big funds or like maybe like special dinners that would happen, be putting on by a PB or somebody that's well connected. But I see more and more socialization happening of best in class processes online in these communities that are getting more and more open. And like this podcast is to some extent an attempt for me to be able to like open up a world where we can talk about technology, data, and AI. I mean, that's why we built Hedgeneer. That's why like you're coming on the show too. Like you want to be able to share this with the larger audience and how you can use Eagle Alpha for getting alternative data. Another thing that like just popping to my mind, like Gappy, he was head of QR at Citadel, and he was the HRT. Now he's on garden leave heading to BAM. Just did an AMA on subreddit, on the quant subreddit, which I think is awesome. Like having somebody like on their garden leave, taking an opportunity to share a wealth of knowledge with a community that is voracious for information. And then like having a library like Tyrannico, we're like, oh, let's just take some of those best in class practices and just put them into an open source library that sits on top of NumPy, it sits on top of Pandas. So it's not really that complicated. And building out an ecosystem there. So like in all of this is again, back around the narrative that there is the moat that exists around just the technology side. I'm talking about like the platform, the data models, the APIs, the dashboards, the integration that exists within the MultiStrat. Like that platform of data is actually far more shallow than I think most people realize. And like for us, that's our entire business. As we go out, we want to offer our clients the ability to be able to say like, hey, work with the Hedgeneer platform and we will deploy for you a world-class enterprise data model that captures everything from all of the checks that your LP have written into a commingled fund to the instrument master, to the position master, your cash activity master, tie all of those to a issuer of the instrument. That issuer has events. There's analysts with coverage around those issuers, be able to measure their forecasts, whether they are in a price target, whether they are a point estimate on a KPI mapped to that company relative to consensus, or its probability of success, upside, downside. That whole data model, that from my perspective, that's table stakes. Like if you don't have that data model right now, well managed in a single source of truth that can handle things like changes over time, the bitemporality of it, then you don't really deserve to have a seat at the table by 2025, definitely by 2026. And so the biggest question that a fund has to answer is, how do I get that, right? Like, how do I get that enterprise data platform? And right now, the primary way in doing that has been, I need to hire a CTO. I need to then hire a director of engineering, and they then need to hire software engineers. Underneath those software engineers, some are going to be data engineers, some are going to be quantitative developers, some are going to be UI developers. I suddenly have all this complexity going on. Let me hire a data architect. I now need a project manager. Maybe I need a designer. Maybe now I need somebody that is just the COO of this vertical. And before you know it, this entire team of 20 people, sometimes a lot bigger if you look at some of the other the recent launches, are building something. Some of the teams are building things that are unique, that are differentiators or alpha. But from my seat, as I've watched a lot of the rebuilds of what they're trying to replicate at the existing managers, it's all beta. They're rebuilding the same thing. And so in the scenario where there's a thesis that the multi-strats take over the world because of one reason being the technology moat is something that is insurmountable. Yes, if you have to go and rebuild the entire thing yourself, I would agree with that. But like, that's what Hedgeneer is going about doing. We want to build that platform that a manager can run their infrastructure on top of, that can have their dashboards and that single pane of glass displaying, that can immediately integrate into something like an Eagle Alpha and make it a single turnkey snap of a finger of onboarding a data set. Because it's so often that, at least when I've talked to clients, like, hey, I would love to buy more data. I would love to get these analytics into my system. I just don't know how, and I can't do it. Like, I would love to buy more data. I can't. I don't even know how to theoretically manage that. And a lot of times what happens is that then you have a single champion within a buy-side firm that's your head of data science, and they are saying they're finding out a way to get all of this stuff together. They build their own systems, and then bam, they're gone. They either get another job offer or they get let go because there was a budget cut, and now there's no platform, there's no institutionalization of that. It was just one data science person stringing some stuff together, and none of that was institutionalized in the research process. Which is why there needs to be that's what the platform needs to be. And it's I think we're just a really interesting time where I think there's a lot more disruption in the alt space when it comes to technology and data. And we haven't even touched on the AI side, but I think that AI is like a cherry on top, but it is not the silver bullet. And because I think the silver bullet is just having like people that finally figure out how to get off of a non-compete after years of sitting out, knowing what good looks like, and just going to build the damn thing. And that's what we do at Hedgeneer. And then we find ways like, how do we get the best data in the hands of our clients? And that is, well, you need to work with Eagle Alpha because they've normalized 2,000 different data products that you need to be able to be in a place where you snap your finger and you say yes or no. Do I get the ROI for what this looks like? And if there's 2,000 data products out there, let's evaluate every single one, work with Neil on what makes sense. And then now once you get to the tip of the spear of everything that works off the shelf, now let's start ideating what comes next. And that's where like, there's probably no better firm to be able to step in and help a fund think through what that looks like than Eagle Alpha.
Yeah. I think what you've described there, like I've spoken to so many funds, and we as a business, we probably spent time with over 1,000 funds and over, definitely the last 7 or 8 years. And normally what you described there is breaking down into 3 areas. You've got sometimes a culture gap, or you have a skills gap, or you have a budget gap, or some combination of all 3. Now, there's early adopters, and if you can see those individuals move through the marketplace, as you say, that they're not constrained, they're not in non-competes. If they can go and spread the word, so to speak, about the benefits of having a robust data infrastructure, data platform in place, that's a major positive. And if that's just an isolated individual within a fund, that's a challenge. So you want a true data culture through the firm. I think, to your point, it doesn't matter whether you're quantitative, private markets, multi-asset, short-term, long-term. If you don't have a data culture, you're not going to be a successful asset manager. irrespective of what your strategy is. So I think the culture point is really important. And the second thing then, just going to your earlier point, like if we can break down the skills challenge, that there's better tooling and better infrastructure there, that you don't need that same number of data scientists and data engineers and quant researchers, and all the various roles you mentioned. If that can be a less complex exercise, that's a positive. And then you're on to budget. Once you get through culture and having the right skills, then you're on to budget. And you asked earlier about the pricing of data. We haven't seen any major change. I mean, consumer transaction data sets used to be really expensive when they first became available because of scarcity initially. And there's a lot of alpha when, there's only a few people using these data sets back in 2014, 15. But then, in general, then it's getting through that budget gap, and good data products do cost money, and evidence value and getting payback is key to being able to justify the price.
Totally. And I could say the same thing about data culture as I could around risk culture. That it doesn't matter if you are a systematic, fundamental, discretionary, long-term, short-term, earnings-based investor, you need to have good risk practices, and it falls down to the same three categories. Is it important? Do you have the talent? Do you have the budget? But you can't not be data-driven the same way you can't be risk managed. And there's all of these best practices that's kind of interesting, have been iterated on within these larger multi-strats for years. And it's not just about the technology, because I think the technology is a outcome of great process and clarity of vision. And if you have great process and clarity of vision of what that process needs to look like, it's not hard to translate that into technology. But without having great process, you're never going to have great technology. You're not just going to magically be able to figure out what a great system looks like and then back into enabling a great process coincidentally. It's always a prereq on the process before technology. But if you have people that don't know how to have a good process on risk management and you don't know how to use data effectively, technology is never going to save them. Unless that technology also has great process already built into it by people that actually did know what good looks like. And you see the same thing with Salesforce, where you have organizations that might have great product, but they don't have a great sales process. But Salesforce was built around what good process looks like in enterprise sales. And let's codify that in a data model with an account, a customer, a contact, and then take that, instill it in technology, and then distribute that to a large set of clients that suddenly use this technology to enforce good process to begin with. But if you don't have people thinking about what does good process look like and then translating that into technology, you're never going to be able to just hire technologists and have them create for you something that will give you good process if you didn't have it before, if you're the one that's building it yourself. But if it's something that, hey, can I buy good process that's instilled in technology? That's something that you need to make. There's not many firms that are focusing on, at least for the types of problems that we solve, other than engineer at the enterprise level. With that said, you did scratch the surface of AI, comes up all the time. I hate to over-index on it, but it's something that every day or at least every week, there's a new use case that we're using that just transforms the way that we're building engineer, the way that we operate or we think. Curious to see what you see going on within the alt data space.
Yeah. So we're some time now since the announcement of ChatGPT, and I think, we've seen a hype cycle, so to speak. We were quite cynical initially because we saw a lot of people latch onto the AI term with exercises that weren't generative in nature. Our in-house engineers would say you can do that with machine learning. It's not generative in nature. So there are a lot of examples where I think experienced engineers were somewhat cynical. But now I think what's very positive is what I hear both internally with our own engineering teams and also externally is a lot of these new technologies are helping work with some of the more challenging, time-consuming parts of working with complex data. So a lot of people will tell you if you're working with a complex data set, you might spend 80% of the time allocation on working on something that is not at the alpha or data science or quant research side, just data preparation, data tagging, data cleansing, and that LLMs and so forth are helping that. And I think if we can take down the time allocation to those parts of the exercises, that's a real positive, because that's a big time allocation for bringing these data sources into an investment process. So those type of things are very, very encouraging.
Yeah, I'm right there with you. In terms of like the data engineering side, we've seen a lot of success recently with mapping data sets together that don't have a common identifier between the two, using embeddings and then cosine similarity across those embeddings on fields that are relevant within that data set. So let's say like you have one data set with a drug description and then a drug name, and then another data set with a bunch of drug descriptions and drug names, creating embeddings based off of the best embedding models you can get right now. Like I think the best off the shelf right now is Ada at OpenAI, and then creating those vectors across two different data sets, names, descriptions, etc. Run a cosine similarity matrix multiplication, and suddenly you have a sort of descending list of what the best mappings are between these two different data sets that suddenly go, now I can use this one data set to refer to a drug with a maybe like script sales or revenue or what's going on within some other thing that's relevant, and another data set that I can use for, I'm not going to go into details, but you can start joining this data together relatively easily when there wasn't a primary identifier. The same thing is with companies, where you might have companies referenced with different LEIs. With Bloomberg has IDBB company. Every data is like a visible alpha of like a VA company ID. And then it'll be referenced in these entities will be referred to in multiple data sources. Being able to really quickly, like, all right, let's just map these two different things together, not in the first case of drug, but the same to a company. The same thing works for an event. Same thing works oftentimes for an instrument. All instruments have a little bit more commonality for universal identifiers, but even that, there's a lot of complication. But we've been getting we've been trying to say, like, we have a core data model. Can we onboard a new data set that's relevant to one of these resource types that I was talking about earlier, and onboard it and map it within 10 to 30 seconds, and have that get you like the 90-10. And that last 10, let's spend some time figuring out what the idiosyncrasies are, and using the best embedding models that we can find to make that as easy as possible. And the second level of like, how do we then QA that? So then we're using reflection of saying like, hey, these two data sets are mapped together. Now let's pass back the results of the data mapping, and you run the embeddings in two different data sources, run a cosine similarity, have a very explicit cutoff on what the min threshold is there. And then now we have these two data sets that it seems as though we've mapped, let's say like 40% to. Well, if you use a very large context window, let's just pass that to a prompt in a language model. It's like, hey, we think these two things are identical. Do you agree, or can you identify anything as like a high-end data quality engineer that we're missing here? And have that reflection then get passed to another prompt to say, like, did they approve this or did they not approve it? And go back and forth a little bit. So like embeddings quick. One, is there any like high-level fruit that you can say, yes, explicitly these are the same because they have the same identifier? If not, choose embeddings. If the embeddings find some matches, figure out a min cosine similarity score, take that, pass that over to a couple of reflection circles, and then that gives us a pretty good first pass if we can do that all within 1 minute of mapping these two different data sources together that otherwise might take weeks, months. Can we get that down to 1 minute? And there's like, that's just what we happen to be talking about this week. Next week we'll be like coming up with some other use case. Yeah, and it's an exciting time, man. It's an exciting time.
I couldn't agree more. I mean, it's so positive to hear that, advanced engineering, experienced engineering groups like Hedgeneer are seeing this, that are working with these complex data sources every day. So actually, we're going to do something in October, which will be fun and different for the industry. We're going to have Data Week in New York. So we're known for our conferences. We're going to have a conference on Wednesday. This is October 9th. But on Tuesday and Thursday, we're going to allow people to spin up these specialist discussions on these type of topics. So we really want across Midtown New York that we're having conversations on things like the search for talent or how LLMs are changing data engineering. We're going to have people speaking about how GPT is going to, change the job function of the CFA in a positive way and from a productivity perspective. All these things we're going to get to discuss, and I hope people from Hegeneer can be part of it. Because what I'm hearing from experienced practitioners is just like you've described. Things that used to take weeks, we're moving from weeks to days to minutes. And that's a positive for the velocity of the whole system.
100%. So we'll also include a link to and any details on the conference coming up in this October, right?
That's right. So October 9th, we're going to be in New York at Madison Avenue discussing a lot of these themes and topics, new data. We've got all these experienced data vendors. We're going to be discussing KPI modeling. We're going to be talking about new sources coming out of corporate environments. And then we're going to have these specialist meetups on the Tuesday and Thursday as well, getting, these sort of more specialist topics where, maybe 20, 30 people want to go into a room and talk about some of those advanced engineering points that you were just mentioning. So it'd be great to have Ed Hegeneer as part of that, and any of the listeners that are in New York that week. It'd be great to see you all.
Absolutely. So October 9th, Eagle Alpha has a data week, a couple different days that week. Some are going to be panels, some are going to be smaller room discussions. I'll include a link to that on the podcast episode as well as on any of the socials. With that, Neil, thanks so much for coming on. I really appreciate you taking the time to hop on the episode. Next time you're in New York, stop by the office. We're right at 300 Park.
Absolutely. And our space there is close by as well. So Michael, it's been an absolute pleasure. Really interesting topic, and it's great to hear that we have that shared enthusiasm for some of the trends we're seeing in the space.
Absolutely. So with that, thanks everyone for tuning in. Again, I'm your host, Michael Watson. This is the Hegeneer Podcast, and we're looking forward to your reaction to the episode. Feel free to reach out to me directly. Feel free to reach out to Neil as well for any questions on Eagle Alpha. And until the very next episode, we wish you all the best of luck. Take care.
Thank you for joining. See you soon.
Hegeneer.